Thank you for everybody joining us here. It's officially 2 p.m. Eastern Standard Time here on the East Coast. We're discussing interest rates and everything that has to do with kind of winning the battle against these interest rates these days. It's probably one of the hottest topics in commercial finance. So we just wanted to take some time to educate you guys on how our borrowers are making it happen despite the rise in rates or increased inflation recently. Winning the battle with interest rates. It's so interesting to talk about this topic at the moment. I'm hearing, I don't want to say crazy things or unique things or anything wild, but as you guys know, prices are rising, interest rates are rising. We're in an economy that is not like it was 12 months ago. So we really like to, again, provide the feedback back to you guys as to what we're seeing. But I always like to explain a little bit about Rock. Who are we? Where do we come from? How are we here? Why are we here? Long story short, before the pandemic, we were a team of about 150 employees. The pandemic hit. We're right here on Long Island in New York. And we were pretty much one of the first epicenters. We shut down business very quickly. We were able to preserve our resources. And getting back to business, James, our CEO here at Rock, decided, hey, I'm going to bring back the core team and we're going to see how we can get this thing rocking and rolling again, and founded Rock Financial. It's been a new brand for us since August of 2020. Like I mentioned, we've been hosting these webinars since November of 2020. So this is our 2-year anniversary on these. And it's been a unique kind of rise to where we are. When we were, prior to the pandemic, we were your traditional style broker in that we were doing a ton of different marketing. We were utilizing Facebook ads and digital marketing campaigns. And, we were big mail, like direct to mail, direct to consumer or direct to business owner mail type of marketing. We were doing a ton of traditional marketing to business owners. And what we found since the pandemic is we can continue those campaigns, and that's fine. But we've really put our strategy behind referral partners and strategic partnerships to be able to reach today's small business owner. We found that the door is a little bit more open when you are being referred to somebody. And, shout out to our referral partners or those of you who were referred to Rock that are on this call today. Again, our mission, vision, values, they're all what you see every single day from Rock Financial. Whether you look at us on social media, you're here in person, you work on our remote platform, it really does not matter. You very quickly get an understanding that, we truly live, eat, breathe these values, this mission of helping these entrepreneurs. We really try to make sure that the process that we've built is what we stick to every single day. We have that old saying here, hey, we're tied to the process, not necessarily the outcome, because there's plenty of business owners who don't take money from us. But when they apply, they're still getting educated. They're still understanding how can they use the market to be what they need it to be today. And that's what's powerful about Rock Financial is we want to give you the access to make the right decision for your businesses. Really quick, a little bit more insight on Rock. High technology driven platform here. We have a lot of really intelligent people who operate our platform behind kind of all the technology here. But as far as the technology goes, we are backed by some of the biggest and most name brand names in the industry in terms of Salesforce being the biggest CRM in the world, followed by all the other different technologies that we utilize. Even some proprietary technology like our My Partner Portal. So if you're one of our partners and you're utilizing that My Partner Portal, that's something that was designed and built by the Rock team internally here for your experience. So again, just really trying to give you guys some insight into who we are and how we operate. Now just kind of diving into the topic today, right? What is it that we're going to talk about and how are we going to go through this, right? It's pretty simple, right? What is actually up with these interest rates? Why do interest rates change? How are they affecting the rates that you're seeing today in mortgages, in car loans, in lines of credit, in credit cards, in business funding, right? Obviously, that's what we're here doing is business funding. How does it work, right? Well, the Federal Reserve, they set what's referred to as the federal funds rate. And this is a rate that banks use amongst each other, right? The central bank, they're using this rate amongst each other. Where you'll actually see a direct correlation between the rates that you're seeing at banks and the rates that you're hearing about on, on television, on the news, is the prime rate. Prime rate is what is directly affecting customers at these banks based on savings accounts, on the loans that these banks and lenders are writing. So the prime rate isn't necessarily set off of the federal funds rate, but it's certainly a heavily correlated relationship between the two. So as the Fed continues to raise their funds rate, it's going to affect the prime rate. Now, different types of borrowing are affected differently, right? Business loans are affected different than a residential mortgage. I saw this firsthand in the last 60 days. I closed on a home on September 29th. That is not that long ago. The reason that I tell you that is I went through the mortgage process. And as we were going through the mortgage process, shocker, the Fed raised the rate 3 times. So I froze my rate. I was able to keep my rate and lock it in. So as the Fed started to raise their rate, I called my loan officer and I said, hey, what's going on? The rates are going up. How's this going to affect my mortgage? And he kind of broke this whole thing down to me. And it really led me to kind of dive deeper into the business loan side. How is this affecting the lenders and banks that we work with? And that's where a lot of this information comes from, guys, is real live research that's been done in the last, to be honest, 60 days, because this is directly affecting all different parts of what everybody has going on. I don't think everybody realizes all the different ways that this is touching everybody, right? Whether you have a credit card or a mortgage or a student loan, or you're a business owner applying for a business loan, you will certainly be affected by this conversation, right? We sell debt, right? I'm looking at Andrew for a second. We sell debt here at Rock Financial. And what I mean by that is we're not taking any equity in any of the businesses that we get funding for. We don't take any ownership, right? We're not taking any profit at the end of the year. So when it comes to the financing that we provide, the interest rate is certainly going to affect how business owners make decisions. And you may be sitting there thinking, like, obviously, Tony, it's going to affect how they make decisions. Well, you wouldn't believe how some people make decisions. But I promise you that if you're not looking at it to make it make sense, that's where the dollars don't make sense, right? Most people in their life are going to use credit at some point, whether that's personally, business credit, you get a credit line. It really doesn't change. Credit is always there. Interest is always there. What changes, though, is the amount that's being charged, right? So if you can understand why the amounts are there and why they're being charged, you may be able to time the market correctly, either on a downtrend when you need to make more money, or on an uptrend, prior to it rates rising, you take advantage of taking money now. Like, you'll be able to kind of spot these things because you've seen it and you have a good understanding of why it exists. Now, this is probably the most important question that you're going to see on I think there's like 17 slides here or something like that. What is the cost of doing nothing? What is the cost of doing nothing? When we, I hate to use this term, but when we sell money to business owners, there is always a cost. Anytime you buy something, there is a cost, right? So that cost of capital is always going to be there. Again, whether interest rates are high or low, there's going to be some sort of cost of capital. So I asked the question of, hey, if you can't get that inventory, if you're not hiring those employees, if you can't buy that piece of equipment, if you're not going to meet payroll this week because you have slow paying clients who aren't able to help you meet that payroll, how does that affect you? What is the cost of doing nothing? And have you, as a business owner, assessed that cost? Because listen, let's face it, money is expensive right now. And if money is expensive, how do you, as a business owner, dictate whether you're making the right decision or not? Well, you need to make sure that you're weighing all of the costs. And one of the most important questions you can ask is, am I doing the right thing by doing nothing? You know, a lot of times businesses, they say if they're not growing, they're dying, right? And what that means is these businesses need to take advantage of purchasing additional inventory when they can. They need to make sure that they're able to start projects on time and not have to wait for, checks to clear or, different things going on. They need to be able to pay their employees, right? There's people borrowing money today because they have slow paying customers. And because of those slow paying customers, they're going to have a hard time meeting payroll tomorrow in their business. They will borrow today and pay their employees tomorrow. I promise you. So I ask you the question of, hey, if that person doesn't pay their employees tomorrow, do they have a business on Monday? Are they showing up, and are their employees showing up? And if their employees show up, are they happy? Are they going to do the job? Again, I ask the question of, hey, with all these rising costs going on, with you knowing inflation's being at a high for certainly this generation and the last couple, how do you, as a business owner, dictate what to do, right? And listen, it's not a simple answer, right? And that's why, again, when somebody applies with Rock, we give them all the options so they can make the right decision for their business. But one of the things that we also make sure that they do is they're looking in their peripheral and also asking those questions, because a lot of times people will get stuck on the payment or the term or the rate. And a lot of times those things are irrelevant. The cost is you actually not doing anything, right? It's not taking advantage of the opportunity. It's not solving that challenge. Well, how can I get ahead of these interest rates? Prime rate is, Andrew, double check this for me, but I believe prime rate is 7.25 or 7%. I'm not exactly certain, but I will get exactly what prime rate is exactly at the moment in 1 second here. But with prime rate being that, the SBA is 7. Prime rate is 7%. The SBA is 2.75% higher than prime rate. That is 9.75% APR. What that means is even the SBA, which is government-backed money and is typically cheap capital for businesses, is expensive. So how do I get ahead? Well, we got a few pieces of advice here, and I kind of want to go backwards because I think seeking professional advice is probably the most important thing here. Number one, have you applied at your local bank or credit union? Do you meet their minimums? Because the banks, again, they're the ones setting these rates. So they're the ones that are going to give you the cheapest cost, right? And if you have spoken with a banker or a loan officer at a bank and you know that you're not their core client, have you spoken to your accountant or possibly a business consultant or your business coach? Do you have any resources out there that you know of, in terms of financing? Go to your local SBDC. I'm not sure if everybody on this call is familiar with that, but there's a free government entity out there called the Small Business Development Center that will help you make financial decisions in your business, right? So again, I would start with seeking personal advice. And that's because, again, I believe I can learn more from other people's mistakes than I'll ever learn from trying to make them myself, right? So, if I'm able to just do the right thing the first time because somebody else made the mistake, I'll take that. So again, I would start with seeking that professional advice. The second thing is take a look at all of your finances overall. Is there a way you can save money by consolidating some things together in terms of, high interest loans or maybe credit cards that you have outstanding with a high balance, right? Are you able to take a loan today on a longer term so that the payment is a little bit lower? And shout out to Vincent. I didn't even know you were on the call. Vincent works directly at the SBDC and is a major, major help to the small businesses in his community. And I can't stress enough how great of a resource he is, but the SBDC is overall. It's amazing what they're able to provide. I believe they're one of the best kept secrets in small business. But as far as the kind of looking at your finances go, I would say, is there a way, like I said, to take capital over a little bit longer of a term? Now, again, longer term, riskier type of deal, it might cost you more in terms of the rate. Your rate will probably be higher if you take a longer term deal versus a shorter term deal, versus a shorter term deal. So knowing that, I challenge you to really look at that payment. Is it something that you can afford? Because guess what? You may see rates go down 12, 15, 18 months from now, or even 36 months from now, and be able to refinance that rate even better, right? I was having a conversation with, actually, it was my barber as I was getting my hair cut at 5:30 this morning for this webinar here. And my barber is cutting my hair, and he's like, we're doing some things to the house, and he starts telling me he wants to basically redo his whole kitchen, move his staircase over. He's got some stuff that's going on. What's so crazy is he starts telling me, hey, I don't think I'm going to do this for a while because I don't necessarily know. With interest rates being up, I know all the costs are up. He's like, it's probably going to cost me like $80,000 to $100,000. So the first thing I did, being that we're in the age that we're in, I take my cell phone out of my pocket, I go to Google, and I type in home equity line of credit calculator. And I pulled it out, and I ran him his payment on an $80,000 HELOC right in front of him. And I said, well, can you afford $481 a month? And that was on Bank of America's website. I pulled out another one. We did it again on a shorter term, and I showed him the difference. Hey, this rate's actually a little cheaper because the term is shorter. And do you think that you could afford that payment at about $875 a month? He goes, no, I really like that $400 and something one you showed me before. I said, well, guess what? That's actually a higher cost of capital. That's a higher interest rate. You don't even know it though, because the traditional thinking tells you, hey, that's a higher rate. I don't want that. That's not true. You want what's comfortable and makes the most sense. And I said to him, I'm like, listen, man, you could have your new kitchen before Christmas and be taking advantage of having that all the way up until you can refinance that note when rates come back down. So again, as far as your investments go, I would again go back to those professional advisors that you have in your network. And certainly take a look at everything across the board. Valerie just kind of hit on where I was going to go with this. Rates did just lower slightly a little bit. They came down from, I believe, 7.25 to 7, and that's where I was a little confused there. But you're right, rates have dropped slightly, but we're preparing for the Federal Reserve to raise them again in December. They're talking about possibly raising them again in the early spring. So the outlook here is that rates are probably going to continue to go up. So you definitely want to make sure you're planning ahead. And the number one thing that we're seeing businesses do today is take advantage of what is available right now. That's the best piece of advice I can give you. I bought my home when prices were high and rates were high. Why? Because I needed the house. If you feel like you need this capital, this extra $50,000 in your business, and it's going to allow you to purchase that inventory, to do that marketing campaign, to hire those employees, or to grab that piece of equipment, then you should do that right now, because you don't know if rates are going to go up in 6 weeks. You don't know if that's going to affect your risk profile differently, and that approval is gone in a month or two from now. So the best thing that we see business owners doing today is really taking advantage of what's available. Now, listen, you may get up to 100,000 and only take 50, or you might get up to 50,000 on an equipment finance and still need a $25,000 line of credit alongside of it. All of that is all good by us. But at the end of the day, what we're saying here is the worst thing you can do is try to batten down the hatches and do nothing, because a lot of times that's going to cost you the most. These talking points here came directly from our team. And I thought it was important to really kind of leverage the people who work with the business owners every single day here for some of the points that we wanted to make in today's webinar. And I really am glad that we took the time to do this, because as you guys are reading through this slide, I want to point out that when you're looking for financing, the timing isn't always right. So how do you as a business owner make sure that when the timing is right, you're doing the right thing? Well, the number one thing is always be prepared, right? You may not need capital today, but you might need it 3 weeks from now. You might need it in a month and a half. You might need it in 6 months. And if that's the case, is what you're doing right now putting you in the best position 6 months from now, or a month and a half from now, or 2 days from now, right? And that mentality will allow you to understand, not understand, but more feel comfortable in being able to borrow at any time. Now, as far as that timing does go, if you're able to, one of the pieces of advice that we're giving out right now is maybe you take a little bit extra. And you got to be very careful the way you word this, because let me just say this. We do hundreds of transactions a month, anywhere between 400 and 600 transactions a month. That's pretty much where we fall every single month. With that being said, when you produce that much volume, you got to understand there's a lot of people who don't take money from us. And even in those times, we still provide a full education behind what it means to borrow and being a smart borrower, right? You may come to us and say, hey, I need $75,000. We turn around and we say, hey, you qualified for $150,000. Have you thought about taking 85? Have you thought about taking 90? Right? That extra $15,000 buffer may cover payments for 2 months. It may cover, it may cover a slow time over the winter, right? If you're in the retail world and you're looking to, hey, I'm trying to take advantage of right now, hottest time of the year, got inventory, got to flip it, got to buy more, flip it again. But then once, the holiday season kind of ends, we're slow again. So I don't necessarily need all that much capital. Like, I don't want a hefty payment going into that slow season. Well, I ask you this, when you get to that slow season, how did you get there? Did you limp into the slow season? Were you able to really take advantage of purchasing a ton of inventory and flipping a ton of inventory? Again, you know your business and the cash flow better than we ever will. We're just here to give you all of the options. And then the last part that we wanted to point out is that a lot of people don't know this, but the cost of capital is a direct deduction on the way that businesses file their taxes, right? If you're looking at a highly profitable business, right, and that business has paid $25,000 in interest or $50,000 in interest on loans throughout the year, they can write that off against the profit that they've made that year and potentially mitigate some of that tax liability to Uncle Sam at the end of the year, right? So when you're talking about, hey, I got to pay all this interest, yes, you do. You're right about that. And Uncle Sam is aware of it. And Uncle Sam's going to give you a break for it. So if you have loans or a loan against your business, or you're looking for more insight on that, we always say speak with your CPA, or whoever does your taxes. But when it comes to understanding how to navigate through these things, it's important that you understand what are all of the benefits, right? There are benefits to borrowing capital. It's a major advantage to borrowing money, right? I always give the example of, hey, if you had $100,000 in your business, you need to buy a $50,000 piece of equipment. You turn around and buy that piece of equipment, you got $50,000 left, right? If you take out a loan to buy that piece of equipment and that loan costs you 30%, that's going to cost you $65,000 for your $50,000 piece of equipment. But you still have your $100,000 in your bank account and you got your piece of equipment. Now, as you start to make those payments back for that piece of equipment, you can write off that $15,000 in interest, or the 30% against that $50,000, because again, that interest is being able to be tax deducted against your profitability. The best part about that scenario is Section 179 of the tax code. If you are using this money to purchase a piece of equipment for your business, it is possible to depreciate the entire value of that piece of equipment in this tax year. So what that means is, in my same scenario, you have your $100,000 in your business and you are able to lower your tax liability by the full $65,000. So again, I don't want to get too deep into the tax talk. There's 87,000 pages of tax law provided by the IRS, and then something like 15 of them are on how to do things right. So it's all about the things that you can do wrong, and that gives you a lot of different things that are going on. So I don't want to go too deep into that rabbit hole. But as far as interest rates go, guys, that's what we got. I wanted to just quickly highlight what we're using or bringing to the table in terms of financing against these interest rates. What is it that businesses are taking advantage of? A lot of times they're taking advantage of the accounts receivable that they have. A lot of people we're seeing using a line of credit because, hey, listen, I may need access to 100,000, but I only need 20,000 today. We see a lot of people using multiple products, right? Hey, I'm going to go take out an equipment financing so that on that piece of equipment, the cost is very low. And then I also need a line of credit because, again, I need that additional working capital. Or maybe, hey, I just need a working capital loan or a term loan, whatever. It does not matter to us what product you're using, but the entire mix is what's available to all of the borrowers that utilize the Rock platform. I always like to highlight some reviews. These are real people who've left reviews, whether they're partners or they are. Your response only went to. You got to send the response to everybody. I don't think it went to him. It went to host and panelist. Oh, okay, it did go to him. Sorry. But I always like to highlight. Sorry about that. There was a question in the chat. I wanted to make sure we got answered. We always email out the recording in case anybody was wondering. But we work with a lot of partners, guys. I know I mentioned that earlier on the call. Like 100% of our business comes through partnerships. So you'll see partners leaving us reviews. You will see their clients leaving us reviews. It really, really is a true rock star experience that we provide. And I don't use that term lightly. If anybody's been on these webinars in the past or you've done business with Rock, you already know what type of experience that we try to provide. And then I just always like to, at the end of these, feel free to let anybody know who might not be a partner already with Rock, how they can certainly do so. My team is ready to rock with you. So if you reach out, whether you're using the phone number, you send an email to partners at, you go to the website and you sign up directly on the website, it does not matter. Our team is ready to rock, as we say. Again, thank you guys. I hope everybody has a rockin' rest of this week, rest of this month, holiday season, and look forward to hopefully seeing all you guys back on the next webinar. Thanks again, everybody.